think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. And so we are bringing back on Doomberg, who has been a frequent guest of the channel, so that we can pick his brain and figure out what should we be thinking about, what should we be acting on, and how we could prosper in this world of chaos and uncertainty. So how are you doing today, Doomberg?
Daryl, I'm doing great. As we were chatting before you hit record, it's publication day for us, which is always busy and fun and a bit nerve-wracking because we make sure you haven't gotten anything wrong in your piece or any typos, heaven forbid. But otherwise, they're doing great. How are you doing, my friend?
I am doing pretty well. Just continuing to, pump out content, trying to balance all the things with family, work, and life, and businesses, and everything. But I'm doing well. I'm blessed by the best, and I ain't got no complaints.
Same here. Same here.
For sure. So I wanted to just start off and just get your take on your macro outlook on the U.S. economy. I mean, we have a lot of different things happening. We have the Fed cutting interest rates. We have a presidential election coming up, and we have the government spending trillions and trillions of dollars. I think there's $1 trillion added. I forgot however many days, but we have huge deficits. And we have gold skyrocketing right now. And so, we could touch on gold later, but I want to get your macro outlook on the U.S. economy as we're heading into a new presidential season.
Yeah, great question. You may recall earlier this year, or maybe it was even late last year, we wrote a piece called Slick Landing, where we made the call that we didn't think we'd see a recession, at least up until the election day. And here we are nearing election day, and the U.S. is not in a recession at the moment. And one of the reasons why it's not in a recession is because of what you just articulated, really, because the government is spending money like crazy. Look, the federal government is about 25% of GDP, and it's growing at 6% year over year. I mean, that's pretty hard to trigger a recession when that large part of the economy is actually growing. People understand intuitively that deficit spending is bad in the long term, imprudent, and ultimately sluggish for growth because government is not as agile as the private sector is. But that doesn't necessarily mean that in the short term it's bad for the economy and will trigger a recession. And so both things can be true. We're spending like crazy, which by definition means our economy is running hotter than it would be if we weren't spending that much money. What happens after the election, all bets are off. I think that this particular election is sort of an economic singularity past which it's pretty difficult to make predictions. We hope for a decisive outcome either way, that both sides agree, because a hung election or a disputed election could be particularly bad for all of us, for politics, for society, for the economy. So let's hope for a decisive outcome. But right now we see energy markets relatively well supplied. The U.S. fiscal situation is out of control. A recession has largely been avoided. Cheap energy helps in that regard, especially in the U.S. and especially with natural gas. And then we see gold and silver mooning. And there's lots of reasons for that we could get into as well.
Mm-hmm. Yeah, thank you for sharing that. So it's in this election, I've read the book, The Fourth Turning is here, and in each side feels like life is on the line, for whoever wins. And obviously that's a broad brushstroke, but generally the sentiment is like, oh, if this person wins, then life as we know it is over, right? And like it's a life or death election and everything. And I think that this is dangerous, just to even have that mindset, And so, could you speak to that? I mean, that's it. Are you seeing that same type of sentiment?
Yeah. I mean, it's the problem is people live in information bubbles, right? And they are fed by algorithms, highly curated, bias confirming, quote unquote, news. And one of the things that we do, which I think differentiates our research capabilities, is we proactively try to read as much stuff that we would probably disagree with, especially while researching our pieces. Find the counter arguments. So I'll give you a great example. We spend a lot of time reading English language news or English language translations of domestic Russian propaganda, Iranian propaganda, Ukrainian propaganda, Chinese propaganda, Israeli, Canada, Australia. All of these countries have medias that portray the world in radically different ways. And if for no other reason than understanding what other people are telling themselves, I think it's important to get that sort of meta level of information and analysis and then come to your own, hopefully more balanced opinion as to what the truth actually is. And in the US in particular, the polarity is off the charts. Both sides think the other candidate is an existential threat to the republic. That's not good. I happen to think neither are, by the way. I think we've survived 4 years of Trump and we survived 4 years of Biden/Harris. And, you could argue about where we are at the end of each of those 4 years, but we're still having an election. There's still the United States. There's still state governments. There's still highways. The lights still come on. The internet works. I think we put way too much focus and emphasis on who the president is, as opposed to the big giant blob that is the federal government. Like that's a very large battleship that is difficult to turn. And so it's kind of like politics has devolved to team sports, right? And you're cheering for your team. And that's unhealthy. Now, that doesn't mean that it isn't the case, though. And so on our board of analysis is the fact that the US is hyperpolar. We could see political violence. We almost saw political violence in Butler. Thank God the bullet missed. Not just because Trump is a human being, but also because the convulsions that we would have experienced as a society would have been profound. So I agree completely with the premise of your question. If I had a better path forward, I'd certainly try to articulate it and advocate for it, but we don't. I don't know how we get out of this mess, to be honest with you, because people are just fed such radically different worldviews, and the vast majority of people don't spend much time reading the other side, and that's unfortunate.
Mm-hmm. Yeah, for sure. And so for me personally, I mean, how I've been viewing this is I'm thinking about what I can control, and obviously the outcome of an election is something I can't control. I mean, I may have like a 0.0001% influence in that, right? And who's to say it's going to come down to that to that actually happening to where I'm the deciding factor, right? And I think that I focus on what I can control, and so what I do look at is the longer term picture in terms of the national debt, deficit spending, and what implications is that going to have for me? I mean, I'm 36 years old, and my kids. I have a daughter as young as 2 years old, right? And so, and this stuff matters. It's like, okay, what is this going to look like for me as I get older, and what is it going to look like for her as she gets older? And so I mean, those are the kind of things that I think about. What can I control? And so, what would you say is your assessment of this dynamic? I mean, obviously we all know that fiat currencies fall. They fail at some point. Right now, we have competition to the U.S. dollar, potentially from the BRICS and such, and we have like a nation that's heavily indebted to where the money printers are continuing to come on and everything. And so I'm just like, okay, what is this? What could this look like in the future? And so I just want to get your take there.
Yeah. So first of all, I agree with your assessment. I was reminded as you were talking about Simon McAlovich's great appearance on the Grant Williams podcast a couple of years ago. For those that don't know Simon, he's an immigrant from Russia, now an American citizen, and he was telling the story about his grandparents who had survived the First World War, the resulting revolution, the Great Depression, um, World War II, and World War II was very devastating to Russia, right? And yet their family nucleus remained. They got through it. Uh, you know, starting at home and working outward is something we believe in as well. We believe, preparedness begins at home. Take care of your family, take care of your neighbors, take care of your friends. The world that I live in is different than the world I see on Twitter. By and large, most people are decent. They yell at each other in person far less than they do online. And don't forget, you're seeing a curated version of the world that is designed to keep your attention. And so I think going outside more is healthy. That's one of the things I personally try to do is like go outside every day, spend a half hour in nature, touch the grass, as they say. And sometimes a lot longer than that. And so I think taking a step back and focusing on what you can control. We like to say react to facts, not fears. You can try to prepare for worst case scenarios. As a defensive pessimist, I certainly spend a lot of time doing that. But react to facts as they arise, and you'll be A, happier, and B, far more likely to be able to respond in a flexible and effective way should the facts change in a way that you feel warrants such a response.
Mm-hmm. Yeah, for sure, for sure. And I think that this is helpful. Today we may need to get some therapeutic exercises from Doomberg because I do think some people are going to blow some fuses when this election happens in a couple of weeks, and I think it's good just to have perspective on life as people move forward out of this, because so much is at stake. People are betting the house and betting the farm on candidates, right? And so yeah, it's pretty interesting. So speaking of self preparedness, right? You and I we've talked about gold, and I think in our last interview you said you had an uncomfortable amount of gold, and we've seen gold rise to I think it's at around 2750 measured in dollars right now, and some people invest in gold. I guess they hold it as an investment. But some people do the equities and hold it for insurance for their money. And so, how are you feeling these days with gold continuing to rise at this level?
I took a bit off a bit too soon. I still have an uncomfortable amount of gold, but slightly more comfortable than the last time we spoke. I took about 20% of my position off upon the volatility that arose when Powell made the rate cuts. It is the one asset in my portfolio that doesn't make me feel great when it's going up too fast because of what it likely means for the rest of my portfolio. I don't view gold as an investment. I view it as a savings vehicle. However, if the price of gold as measured in US dollars grows at a rate that makes my basket of savings imbalanced, I will occasionally sort of dollar cost average the other fixed assets that I like to save in. And I think I said it before, but we earn in fiat, we save in real assets, and we invest privately where we can impact the outcome. And in the subset of savings, fixed assets include land and collectibles and gold. And so sold a little gold and opportunistically waiting to maybe buy a bit more land. But I have still an uncomfortable amount of gold. And it's recently basically parabolic rise gives me some discomfort. Things don't go up in a straight line like that forever. A bit of a healthy consolidation might be more desirable even than what we're seeing right now. But in the end, I don't own the gold to get capital gains. I own the gold to preserve my purchasing power. in timeframes measured in decades, not weeks. But I do have a certain amount that I'd like to sort of mentally cap. And if the price of gold appreciates substantially more from here, I might take even a little bit more off.
Yeah, and so with this recent parabolic rise, it does look very parabolic on the charts, like a straight line up. I mean, it was a bull flag, straight line, and then now it's another straight line. Um, and I was kind of thinking in terms of, okay, well, technically gold is undervalued if you adjust it for inflation back in the 70s and such, to the price it was in the 70s. Um, and then, and maybe it's being revalued to closer to where it should be. I mean, we do see the same with the rise in silver, but there are so many other geopolitical and other tailwinds wins for it as well. And so I don't know. It's just kind of interesting in seeing this recent price move, and I think that um, gold is probably going to go higher.
Yeah, well, I think that the narrative behind much of the recent price action is this BRICS summit that is currently ongoing in Kazan, hosted by Russian President Vladimir Putin. And the belief is that the BRICS countries are working towards a new payment system that will better facilitate the in international trade outside of the U.S. dollar Western system. And there's rumors and beliefs that gold will be a key part of the neutral reserve asset that is used to settle imbalances in such trading activities. If that's the case, the price of gold, the market cap of gold, let's say, needs to grow substantially for it to play that role with any great efficacy. And we are seeing central banks led by the BRICS countries buying gold during this recent past couple of years during the run up. And so that's a reasonable narrative. We'll see what comes out of the summit. Part of my fear might that this might just sort of be a sell the news event. Everyone who's in gold knows this story, and markets turn when the last buyer is in. So we'll see. Again, I don't like to get too close to the day-to-day price action, but I think if you zoom out, in the long run, 20 gold eagles will buy you a very nice SUV today, and in 10 years, 20 gold eagles will probably still buy you a very nice SUV, and that's the purpose of gold, to preserve your purchasing power across long time horizons.
Hmm. Yeah, for sure. So even with even with that, kind of just like what we touched on earlier with the deficit spending and the national debt and how much the dollar is being devalued. That's like I think my main base case is like, okay, this is a trajectory that I don't think we're getting off of. You know, especially who, regardless of who wins the election. There's no talk of balancing the budget. There's no talk of how are we gonna fund Social Security. There's no talk of raising taxes. There's talk of cutting taxes. And so and I'm just like, okay, well, where are we going to get this other income? I know there's been talk of like tariffs and such, and so, my concern, would be, which I don't know how strict the tariffs are going to be. Like, it depends on which news media that you're listening to, right? I mean, if you're listening to the left leaning media, they're going to make it like, oh, this is going to have major impacts for consumers and everything. And then, if you listen to the right, it may sound a little more reasonable in their eyes. And so, when I'm looking at that and I look at like what started the Great Depression was the Smoot-Hawley Tariff Act, where we did implement tariffs on countries like Canada and such. And then in turn, they retaliated and put tariffs on us. And so I mean, I think that's a risk. I don't know the probability of that, but if we were to put tariffs on China, what implications do you think that could have?
Well, I think there is a move afoot to break the dependence that the U.S. military industry has on Chinese manufacturing and supply chains. And in order to do that, we basically need to lower the dollar, make the dollar much, much weaker than it is. And that's something that I think sort of Wall Street State Department side of this tug of war is opposed to. And so tariffs on China, I think, are a real possibility, especially if Trump wins. The friction of that transition is very difficult to model. I do agree with your assessment that it's very difficult to model how we get off this trajectory. I suppose Trump has been talking on the campaign trail that Elon Musk will be put in charge of, radically shrinking the government. That will, of course, throw the economy into a recession. Because if, fiscal spending is bullish for growth, then obviously cutting at the speed with which Trump is talking about cutting would be bearish for growth. And also, it's unclear to me how that would get done legally, because the hardest thing to do in the US is to fire a government employee. So time will tell. But I don't see a realistic path off this trajectory either. We're adding $1 trillion in debt every 85 or 90 days now, which is insane. And so that's why I said earlier, it's okay to earn and transact in fiat, but don't measure your net worth in dollars. I mean, because the value of those dollars is likely eventually going to go down, as evidenced by just the Big Mac index. You can see what stuff buys, how much money buys what stuff. Go to the grocery store and randomly put 8 things in your shopping cart, and it's probably going to cost you $35 to $40 almost no matter what those 8 things are. And so that's why we sort of measure net worth in acres and ounces, because those things will always be worth kind of what they're worth in real terms today. And that's why we save outside of the fiat system. And then, of course, investing privately is more because we see opportunities to use our skills in that regard. But to your initial foundational assumption in the question, I don't hear any talk of real fiscal discipline coming out of Washington. It seems like we're on a train and we're just going to keep on going down those tracks, even if there's a brick wall at the end of them.
Mm-hmm. Yeah, for sure. And so before we wrap up, I do want to touch a little bit on uranium. I mean, there's been, and I didn't imagine you and I, we've had discussions on like how much energy a Google search uses and such. And I know that many of these more wealthier companies like the NVIDIAs and Microsofts and such, and they tend to follow the climate change narrative and everything. And so, thinking about, okay, well, how can they power these data centers? And then we started seeing a lot of this news about nuclear energy and these deals that are being done. And for me, it's like, okay, it makes me even more bullish, but at the same time, I know that these are going to take time. I mean, at some point they're going to have to get the pounds from the miners that are putting it in the ground and all of that. And then also, just sometimes when you get so much hype around something, you want to be a little more cautious in terms of investment positions and such. And I know you're not, well, at least formally, when we've had discussions, like you're not really into stocks, and you just mentioned that earlier in terms of investing privately where you can control the outcome. What is your take on nuclear and uranium right now?
Yeah, I mean, I think we've written about it for a long time. I think we started writing about it when it was in the 30s, and I see now we've basically tripled from there. I think it's a fine thesis. I think the need to power AI will be the thing that vanquishes the climate concerns you mentioned earlier. I think we're going to see a lot of uptake in natural gas as a bridging fuel to nuclear. And once the natural gas is turned on, they won't turn it off. They'll just add nuclear on top of it, because all primary energy is additive. And I do think that AI is going to catalyze a reemergence of nuclear as the ideal source of energy. And we predicted as much a year ago in a piece called Fission Chips, I believe it was called. And what we wrote in that piece has certainly played out. the 3 Mile Island restart is kind of a shocking news, right? When you think about it. And we're seeing big banks get behind nuclear now. So I think the debate over nuclear is settled. But of course, the trade is ripening as well. So I don't know that I would be starting a huge position in uranium today based on a set of facts that basically the market already knows. Teach their own. I think there are opportunities to invest in enabling technologies that can make that happen. That's our preferred approach. If we were to invest privately, find the company that enables the mega trend as opposed to just betting on the commodity itself.
Mm-hmm. Yeah. There's so much technologies coming out. I've been looking at, obviously the SMRs, and then I started looking into the micro reactors and such. And so yeah, it seems like there's a lot of different technologies and sciences that are developing around this. And so I don't know how long that's going to take to materialize, but it definitely, I'm seeing it.
Yeah, I agree.
Yeah. Well, all right, Doomberg, appreciate you for coming on and everything. Where can people find more about the great work you all are doing and to get in contact with you or whatnot?
Sure. You can find all of our work at doomberg.com, Doomberg.com. Simple enough. We own that domain now. You'll find our articles, our pro tier offering, and all of our podcast appearances like this one. Daryl, it's always great to chat. Looking forward to the next time.
All right, sounds great. All right, take care.